Okay, so what I could do is I could just, what I might do is I'll start rambling about something you don't care about at all or nobody cares about, and then maybe I'll start building in.
Yeah.
Okay, sounds good. Hi guys, I'm Josh Olfert and I'm the founder of Haven Wealth Management. What we do is we help people self-actualize their financial life. We help people do things like invest, manage risk, and do financial planning. So this YouTube channel is to help people with those concepts and dive a little deeper into what it means to create a business or become an investor. You may have seen other financial channels around YouTube or the internet, but ours is a little bit different in that we actually have a professional firm with real clients that we deal with on a day-to-day basis. So I believe this provides us a unique perspective for us to dive a little deeper into some of the concepts surrounding wealth and financial planning. So when I was young, I was a pretty good athlete. I was really good at one specific sport. And that sport allowed me the opportunity. It allowed me the privilege of being sought after by post-secondary schools. I had to make the decision earlier than most, of what I might do after I was finished school. I had to decide what university was it that I wanted to attend, and if I needed to make a decision about what school to go to, I needed to have a general understanding of what domain in life I was actually interested in. So I went through this period of life where I just didn't know what I was gonna do. I was kind of stuck in my fantasy teenage dreamland, playing sports, hanging out with friends, and I never really put much thought into what is it that this might all lead to once I'm done. And I, being the silly kid that I was, I went to Google, and you could learn a lot about what my mind was like at this time when I typed into the search bar, and this is actually a real story. I typed into the search bar, what is the highest paying job with the least amount of work? And I literally started down a path to do that because I was so clueless about what it was that I might do. And in my dad's wisdom, thank you so much for him, he gave me a book, and it was called Rich Dad, Poor Dad. And what that book did for me is it laid out the very fundamentals of what it means to be an entrepreneur or an investor. It taught me things like concepts about the stock market, or compounding interest, or investing in real estate, and other concepts that allow you, which we'll talk about more in depth, but allow you how to remove the link between time and money. For me, my primary value was always freedom. You know, I wasn't a great student at school. I felt like I was stuck. I felt like teachers were telling me what to do, family was telling me what to do. I was always being told by some authority that I had to do one thing or another. So I developed freedom as my primary value. And what that did for me is it created this massive passion and interest in how one can create freedom in their life. And for me, the best thing I could have seen was this book about entrepreneurship and investing, because at the end of the day, great entrepreneurs and great investors become free people by default. That's just kind of what happens by removing that link between time and money. So as I began to read this book and really digest the concepts, the next day I went to the public library and took out every single book I could find on investing and on finance and on business. And I devoured them. I started to read those, and through these books I learned about things like the stock market again, and this kept becoming a recurring concept that I kept coming back to. So I decided, okay, the easiest way for a young person to get involved in the business world and really get their feet wet is something as easy as investing in the market. It didn't take that much time at the time. It didn't take much energy. It didn't take much know-how at first. And it was something I could dive into and just learn by doing. So when I was a kid, I was a teenager, and I took out all sorts of money that I was earning from summer jobs. I borrowed money from parents, and I set up an investment account when I was 14. And I started to make my first investments in different businesses, just based on the methodologies and the books that I was reading. So over time, this idea of investing started to kind of work out for me. If you know anything about market history, 2008 to 2009 was a horrible market crash where we saw the price of the stock market, or the general levels in the stock market, drop by 40 or 50%. And one thing to understand is that after every bust comes a boom. So around 2009, 2010 is when I started investing. And I started investing right before a massive boom. So a lot of this was serendipitous. It was right place at the right time with the right interest. And my investments started performing really spectacularly well, which is funny because looking back, I wasn't doing anything overly wise. It was just the serendipity of the situation. Now, what this did is it gave me confidence. It made me think that I was actually a great investor. And I kind of was becoming one by dabbling and reading a lot. But at that time, it just wasn't the case. So I began to regurgitate. I started a blog and I started telling all my friends about things like the stock market and different businesses to invest in and being an entrepreneur. And over time, I started to develop a reputation as the investing kid. People started to know me as that, that was my specialty. That's what I did. One day I had a friend who told me, hey, there's a thing called Google Analytics. You can throw this software on your website and it will tell you how many people are reading your blogs. And I thought, oh, that's interesting. I'd be interested to see. It had been about a year since I had started. I had been sharing across different social media outlets and all sorts of things, just trying to get the word out there that I loved investing and I liked to teach it. So I put the Google Analytics link in my site. I took a look and it looked like I had 10,000 page views per month. And I thought to myself, it's crazy to think that people are that interested in learning about this sort of thing. So I doubled down and I continued to write and I continued to build my network. And what I found over time was that people would enter my inbox on social media, or I would get a text message, or I would get an email, and it would say, hey, I'm in a situation where someone in my life passed away and I've received a lump sum of money, or my family has a business and I get paid a little piece of that to work in the business, and my parents want me to invest it. And I would have just different situations of people coming to me asking for how I might help them invest. And this was interesting to me, so I created a spreadsheet and I started putting in the names of every single person who ever had an interest. And by the time I graduated high school, I had a sizable investment account with a decent track record. I was looking at buying my first investment property at the time, and I had a list of about 50 people who were interested in physically investing their money with me or through me. And what I came to learn through experience was that you can actually create a career managing investments. You can become a financial planner, you become a financial advisor. And what that allows you to do is make a living by teaching and helping other people manage their own investments. So this seemed like a home run to me. It's my exact passion at the right time. There's an opportunity to do it, and it's worked out thus far, so why not? So the irony of the story was that I actually never went to university. I never went to play sports. That dream took the back seat to the idea that I have 50 opportunities ready to start my own business, ready to start a career where I can take on clients and manage people's money for them. So right out of high school, I did my licensing exams, got some sales experience, and headed right into a career as a financial advisor. And it was difficult at first, building trust. I was 19 years old trying to convince people to give me their life savings. And I worked my way through those first 50, but afterwards I was on my own. I had to go out and find ways to help people. I had to find people who saw the value in me and who trusted me. And eventually we built it up over the course of about 2 years. Those first 2 years, through the blog and through content online and through referrals, we built a customer base that allowed me to actually start my own business. So at 21 years old, I started Haven. I started a business that helps people manage their investments and do financial planning and think about things like retirement and compound interest and how they can actually create wealth and how they can create a meaningful life and how they can fund that on the financial side of things. So through the process, I had acquired things like investments in real estate. I had built a network of mentors and people in my country and in my city who did the career that I wanted to do. And these relationships allowed me to thrive in my career. Over time, opening up different opportunities to get involved in other businesses, or building even my own business to the point where now I'm excited that I can dedicate a solid portion of my time to educating people online. So that would be the general story of how this all happened. How does a 21-year-old start their own investment firm? It's not a 21-year-old, it's a 14-year-old who does 6 years of work and eventually one day has the gall or the capacity or they have the gumption to go out and start their own thing. So although it does seem like it could be an overnight story, it is absolutely not. And today, this is where we are. So with that said, if you guys like what you hear, I'd love to have you along for the journey. Hit that like button, please subscribe and turn on post notifications to get new videos like this. I'll have a new video for you really soon. Hope to see you next time.